Welcome to the Knakal News Network. The Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hello, I'm Paul Bubny, Managing Editor of GlobeStreet.com, and welcome to the Knakal News Network. We're here with Bob Knakal, Chairman of Massey Knakal, and today we'll be talking about the Manhattan sales market. Bob, looking at 2013 for Manhattan South and 96th Street, how did we do?
Well, Paul, it's interesting. I think in order to really put the Manhattan activity in perspective, we need to take a look at how the market did overall. Coming off a fantastic 2012, last year we had 3,767 buildings sell, which was about 8% less than we had in 2012. And in terms of dollar volume, we had $37.6 billion, which was down about 9% from the $41.2 billion that we had the year before. So a lot of folks look at that and say, well, the market was down a little bit. But I think that's a little misleading because 2012 was such a great year because of the capital gains tax impact. Interestingly, Manhattan, which usually leads the pack, didn't do as well as the other boroughs. And what we saw in Manhattan was that there was a significant amount of appreciation in terms of value, and that forced a lot of investors out to the outer boroughs to look for transactions. So on a relative basis, Manhattan didn't do as well as the other boroughs did. The dollar volume in 2013 was $28.4 billion, which was down about 10% from the $31.5 billion we had in 2012. But interestingly, the number of properties sold was 789, which was down 34% from the 1,200 properties sold we had in 2012. So you can see the fact that dollar volume was down by 10%, number of properties sold was down by 34%. That tells you that larger transactions were happening last year. For the first time in history, the average sale price on a price per square foot for a Manhattan property eclipsed $1,000. So we had an increase last year of about 15.7% in the average value of a Manhattan property, which is the highest appreciation that we had in all of the submarkets of New York City.
For 2013, what was the hottest property segment in Manhattan?
Well, without a doubt, it was the land market. The land market was absolutely on fire, almost rallying in an irrational way. Clearly, our underlying fundamentals have gotten better, but not to the extent that should push values up to the point that they've been pushed. In the land market, we saw last year an average price per square foot of about $445 per buildable square foot. So what we saw last year was that land prices hit an average on a buildable square foot basis of $445, which is up about 22% from the year before. But the interesting thing was that if you look at the top transactions in the best locations, that average is up to about $845 a square foot, which is just really, really remarkable. We've have had some transactions in excess of $1,000 a buildable foot, and we expect that trend to continue into 2014, as we've already seen in the first few weeks of the year. In summary, the Manhattan market in 2013 performed well, but not nearly as well as the outer boroughs. The tremendous increase in values in the Manhattan submarket forced investors to go to the outer boroughs. The dollar volume of sales in 2013 dropped by 10%, and the number of properties sold dropped by 34% from 2012 levels. This shows an increasing desire for larger price transactions.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.